Hello everybody. In this video for MMT Labs, we're going to be covering stop hunts versus genuine breakouts. Okay. And so to begin with, what you're going to be covering, what we're going to be going over in this video is going to be what a genuine breakout looks like, what a fake out looks like, a few footprint nuances surrounding them. I also cover some indicators as well that I use personally in relation to it. So let's get into it. So first of all, it makes sense to cover the indicators that I use in relation to this all. And I'll start off with the volume suite one, which you can find if you head over to indicators, and then you can use the regular volumes indicator here. Okay, with the thresholds, I personally use, if you go to the community section and use the volume suite indicator, and this is the power of MMT, obviously, is having the ability to use these community indicators that people build as well. So I'm using this volume suite one here, and the settings within that look like this. Okay, you have total volume, threshold, volume mean look back, and in short, this is basically going to highlight where there's pockets and zones of high volume, but also highlight where there's not much volume going on. Okay, so that's going to be really important to cover, especially when looking at volume in terms of fake outs, genuine breaks, and whatnot. And I think it's really important to cover initially what a genuine breakout actually looks like. A genuine breakout, what the first thing you need to do initially is actually identify the level in which you are anticipating price to either break out from or fake out from. So if you just mark a high on the chart, for example, okay, and when you get to this moment in time, you've got a key level marked out and price comes to your level, okay, and as it breaks, you're going to be looking at the volume, and I'm going to be diving deeper into the candles as well here. But if you see a break of volume like this, you see the candle break above and there is no snap back immediately. I think there's something really, really important to understand, is that when you see a genuine breakout, it carries momentum. Okay, it carries significant momentum, and it very, very rarely lets it price come back on itself too much to a point where those people who are going with momentum are caught offside. Okay, so how can we decipher if traders are essentially caught offside? So what we've done, step one, is we've marked the level out. We've seen the break in volume here. So what you do is you go and enable footprint cluster, and we're going to zoom in now on the breakout zone. What I would actually do as well is change it to profile in this case, and go back to this exact zone where you're seeing the breakout occur. I would then also change the custom ticks to any value of your liking. And what you're going to be doing now is on that breakout, right, what you can see, it's easier to see if you change this to delta mode or volume, it doesn't really matter, is you're able to see where the majority of that breakout volume is really coming into play. And this is really important because, like I said, momentum continues, and it very rarely lets these people be pushed offside if it is going to be a genuine breakout. So what I mean by that is you've seen this genuine breakout, you've then got add a rectangle tool here, and this is where the majority of that volume really occurred. So when price comes back down and back tests this zone and doesn't push them offside, it's a genuine sign that this is going to be continuing much higher. It's only where if you see a breakout and price very quickly snaps back and pushes these traders here offside, can it then warrant to say there is no more momentum necessarily, and there's actually fuel for a downside reversal. Reminder that if you're longing here, if price comes offside and you have to close out of that long, you're shorting and you're forcing your hand into the market at that case. And now let's go to a candlestick chart and look at what a fake out looks like. I'm going to cover an intraday example for this because this is something I've noticed specifically within the charts, is if you have a high marked out, for example, like this, is looking at the volume in relation to the candle's body size. This is really important as it can basically identify what a liquidity vacuum is, where you have a really wide candle but a thin amount of volume in relation to that candle size was able to push it up that much. So we have our levels here of a high. I mean, you have a series of highs here, 1, 2, 3 to some degree, okay? But the move into that, right? There's a really wide-bodied candle here, just for reference, really wide-bodied. But in relation to previous price action, the volume is fairly standard. Now, what's that telling me is that there's not much momentum carrying this move towards the upside. So that is one sign in itself that any sort of pullback here can just start to see a flush, because there is no momentum. There's no passive bids. There's no one really, pushing this price up aggressively. What could have just happened is the opposing side with resting limits have removed their sell orders and then given kind of free will to light volume or retail to be able to push price higher before then allowing for a reversal. So what I'm looking for in particular, to be clear, is a median or average amount of volume, but in confluence with a large candle size in relation to the open to close. Okay, just like in this case here. And when I see that going into my level and then price snaps back immediately, like I said again, this is a moment where I'm looking to execute. As soon as I see it, the previous example of a genuine breakout where you saw excessive volume coming in, followed by a shallow retrace and then just continuation. What you see here isn't excessive volume for a breakout. There's not much momentum following this. So any snapback below the level really quickly like this is warranting a short trade for me. So just so you can get a good grip as to how that would work out in relation to low volume, high candle size. That's a really, really important feature and what you can look at in MMT, because it's basically telling you what the opposing side in terms of the order book is doing. So just to be clear, real breaks have momentum. They rarely lose it. They're not going to see a large break, snap back immediately. Real breaks, they'll break out, really small amount of consolidation, maybe a slight pullback before then continuing. And again, that relates to going inside the candle itself, okay, and identifying where that break, if there is significant volume, has momentum and where those traders are being caught offside. And again, in my opinion, for fake outs, you want to be comparing the candle range versus volume in terms of, for liquidity vacuums, and identifying ask yourself the question, this candle has moved significantly. Does the volume, replicate that in itself? So compare the candles range versus the volume for liquidity vacuums. Go inside the candles and identify where the traders could be placed underwater as well, using the footprint chart in MMT. So again, hope you lot enjoyed, found that valuable, and we'll catch you in the next one.